Troy. How you doing today?
I'm doing all right. Looky here, man. I'm wearing some letters across my chest. If you are
Yeah.
Greek, if you're Kappa Alpha Psi, you know what this is. Do you know what this is, Patrick?
Yeah, Final Pie.
What does Phi Nu Pi stand for?
Final Pie stand for I'm not sure for that.
Exactly. Only the noobs know what Phi Nu Pi stand for. And I'm in my fraternity letters, for a reason. We lost an important person in YouTube land this past week, my fraternity brother, Kevin Samuels. And I wanted to kind of give my thoughts and express my sentiments being a member of Kappa Alpha Psi and just a Greek in general. I wanted to share how I stumbled upon Kevin and just talk about some of the misconceptions of the Greek life. Because I know some of you out there in YouTube land that's listening to me right now, you're Greek. And people talk badly about us being Greek. There's a lot of misconceptions. They call us boule, which is insanely ridiculous. I can tell those people did not go to college, or at least did not finish, if they call Greeks boule. Greeks, what we are about is we are about the community and uplifting our people. And so for Black Greeks, the Alphas, the Qs, the Sigmas, to my sorority sisters, the AKAs, the Deltas, the Zetas, even Sigma Gamma Rho. And then there's the iotas out there, if I can find them. Is there an iota in the building? But man, Greek life changed my life. And let me tell you how I stumbled upon Kevin Samuels. And why I'm saddened, and my eyes even reflect it, because I've been messed up for like 3 days. When I heard the news, I was shocked. How I stumbled upon Kevin Samuels, I was on YouTube just searching Greek Kappa stuff, fraternity stuff. And Kevin had and still has a great video on YouTube about how Kappa Alpha Psi and fraternity life changed his life. And he talked about being a young man and transitioning into manhood as a Greek. And he shouted out to the Qs and the Alphas and Sigmas. He shouted out the sororities. And it hit home with me. And I was like, who is this guy? And who is this fraternity guy? And so I live that. I'm an undergraduate Kappa, and no offense to you grad guys who pledge fraternities and sororities at the graduate level, but for us who pledge at the undergrad level, between the years of 18 years old and like 22, it hits differently as an undergrad. And as an undergrad, man, the fraternity life was insane. I pledged at Virginia Tech, Theta Psi chapter, back in the 80s. My line brother played in the NFL, number 5, Tony Page. He was on my line. He was the star football player at Virginia Tech. And I would have dropped. The hazing and the stuff that we went through was crazy. And I would look down at Tony Page and see Tony taking it, passing the egg for those in the Greek life. You know what I'm talking about. Taking the wood, and I said, if Tony can take this, then I can take this. And he was part of the reason why I finished the Greek life. And I was able to survive. So, Kevin, man, I really wanted to have him on the show. I was fortunate enough to reach out to Lead Attorney, and we were videoing behind the scenes. And Lead is pretty connected with Kevin, and my goal was to eventually have Kevin on too. And so I'm saddened that I'm never going to have the opportunity to have Kevin Samuels on this show. I'm pretty saddened by it. I was looking at a number of programs, and I was looking at Sonata. He had this lady on, and she was talking about the benefits of men checking their health and the EKG. And so, as sad as this is, based on the Kevin Samuels passing, and I think the belief is it was heart failure. I'm going to get an EKG. I'm going to get my stuff checked out. I hope other men out there and women get checked out. And if we have any Greeks out there in the building, man, share your experience, because Greek life changed my life. I got both of my jobs out of engineering through fraternity brothers. I am a hiring manager at the company. I'm an aerospace engineer by trade. And I've been a manager for 12 years for the company I work for, Fortune 30 company. And it is very difficult to get in these big companies. But when you Greek, if I see Alpha Phi Alpha, Kappa Alpha Psi, aka Delta Sigma Zeta, it doesn't matter. I pull that resume and they get an opportunity to interview because I know what they went through to join the fraternity. If you can make it undergrad, and I'm talking about when I go to hire young adults. I don't want to call these adults in college kids. If they can make it through into the fraternity and survive the parties, the drinking, and everything else that comes along with being an undergrad, and just get through the hazing from back in the day and into this day, then I know they have at least the mental fortitude to do the job. So then I just need to see technically if they're qualified. So I have hired a number of alphas, a number of kappas. I can't find a lot of Qs and sigmas as engineers, but I have hired some AKAs and some deltas. And so Kevin talks about that. If you guys have an opportunity to go see that video where Kevin Samuels talk about how Kappa Alpha Psi and Greek life changed his life, go check it out. And my condolences to Kevin Samuels and his family. If anybody want to come up and testify on the Greek life and why you should go Greek, please, I'll share the link so you can even come up and testify. Female and male, do not let anyone talk you out of the Greek life. It's absolutely one of the best things that I did. Yeah, I'm black and I'm not from Greece, but the Greek letter means community service. And that's what we're about. It uplifted our people to this day. So Patrick, I just kind of wanted to go in. If I'm lying, I'm flying. I'm on YouTube live, giving a shout out to Kevin Samuels, who was standing up for our people. I didn't agree with everything he said. Like, I'm pretty successful. I don't need like 10 different women and all of this stuff. It's hard enough being with one woman and a daughter. This estrogen is running strong. So you give me one good woman and a daughter or two, and I'm good. But what I do respect about Kevin is he said, be honest with it. Tell the women in your life what the deal is. And I respect that. And then he was just about unity. If you go below the message, he really was about unity. And he was kind of a different type of cat, but he was a good cat, man. And man, I'm so saddened by his passing. I almost canceled the show today, Patrick, just to be honest. And I'm dealing with COVID. I just got diagnosed with COVID, so I'm sick. It's in my voice. But yeah, shout out to the homie, to Solo Polo. He plays by himself in Oklahoma. I can't imagine making it across pledging back when he pledged, back like in the 80s like I did. I'm not sure if it's the 80s or early 90s, but he was by himself. I had Tony Page NFL fullback to look at. Played for the Dolphins, played for the Detroit Lions. He could have snapped someone's neck. And I saw what they were doing to him, and I was like, if he allows it. But this guy plays by himself in undergrad. That is crazy. And so he's an inspiration. Guys, get yourself checked. Get that EKG like I'm going to do. And rest in peace, KS. Patrick, anything you want to say about the good brother Kevin Samuels? Do you know him?
I've come across some of his YouTube videos, and he was, kind of controversial in the way he might have spoken about some of the women who are on the show, but he was always honest. He was very genuine. From what I saw, he spoke from the heart, and yeah, it's a real loss that he passed away. I mean, YouTube is less because of his passing.
Yeah, man. I was really looking for. I was gonna get to my frat brother. I was gonna get to Kevin Samuels. I was, lead. I was working lead. I was gonna work with lead attorney to get to New. I was gonna even fly down to Atlanta to get with them. But shout out to the lead attorney, a friend of the show. If you guys didn't see the interview with Lead, go back and look at it. It was a good interview, Lead. Talk to our young adults about what it takes to be an attorney. So check that show out, as well as all of the Greeks. Happy Mother's Day to the AKAs, Deltas, Zetas, Sigma, Gamma, Rhos, and everybody else in non-Greek land. Happy Mother's Days to all of you guys. Patrick, let's start the show. And the Greeks in the building, stand up for community service and our people. So Patrick, on this beautiful Mother's Day, let's talk about a company that you want to share with our audience that they should consider in this inflationary environment. And then I'm going to share a company as well. And let's get into that. So what do you want to talk about today, Patrick?
Yeah, I want to talk about a company by the name of Eli Lilly.
Okay.
And Eli Lilly is a leading drug company. They were founded about maybe 100 or so years ago. And they do drugs for COVID-19, cancer, obesity, and other healthcare stuff as well. They also contribute to the community. First off, I just want to say that they released earnings in around April 28th or so, and those earnings were way above estimates. They blew the doors off the estimates, and the stock has gone up ever since. They've also increased the dividend payout for the company.
Okay. Well, Patrick, let me share my screen. Let's get Eli Lilly up, and I wanted to talk about AMD. I'm still in somewhat of a funky mood over Kevin Samuels, to be honest. So let's see how far we can get through this. I do have some nitpicks on Eli Lilly, and the reason why I wanted to go through Eli Lilly on this show for people who are interested in investing is I'm going to point out some things you should look out for in an inflationary market like this, and why you should pause and think twice before you buy a company like Eli Lilly. So let's talk about that, Patrick. Let me share my screen, and then let's just start right out with the Eli Lilly profile of the company. And so here's a profile of Eli Lilly, a company that you are excited about, and yes, I will show in a moment the analysts are excited about. So what are we looking at here, Patrick?
Okay, so as I was describing, it's a global healthcare leader that unites caring with discovery to make life better for people around the world. And as I was saying, they were founded about a century ago, and they do drugs across all kinds of medical research and any kind of medical condition, be it cancer, diabetes, COVID-19, as I was saying in the intro. And they also are into philanthropy, community service, and volunteerism.
All right. So what makes this company pretty good? We're on barchart.com, the free version of bar chart. We're going to go down to the analyst ratings here and check this out. I thought it was pretty impressive, Patrick. You've been talking
Yes,
Eli Lilly for a moment. Look at the analyst ratings on Eli Lilly.
yes. I mean, they've consistently stayed a strong in the strong buy territory.
So the analysts think they're a strong buy, and just kind of the breakdown over the last 3 months, which is a quarter. You can
Yes,
look, there's no sale ratings. So 11 strong buys, one hold, strong buys, hold, moderate buy, and then another moderate buy and hold. But the analyst really likes Eli Lilly. So a good board case for you. But I have some nitpicks, Patrick. Okay, so let's go to the charts. And so we'll
yes,
go to interactive charts on
yes,
barchart.com. Now, I have these studies. This is a study here. So I have the study already set up for exponential 200 and the simple moving average. So you can put those into the studies if you want to follow what I'm doing. I'm on a 5-year weekly frequency for the chart.
yes, yes,
So we just look at a long-term view of Eli Lilly. And the whole purpose here for those newer investors is over a 5-year period, you want to look left to right, and you want to make sure that Eli Lilly stays above the red line, which is the exponential 200-day moving average.
that's
And
right.
then the 50-day moving average is the blue line, which is a shorter term trajectory. And so that is just an indicator over a short period of time if the stock is trending down or up. But long term, you want to buy companies that stay above the red line. That's the whole purpose here. So looking at Eli Lilly, Patrick, what are you? My thoughts are pretty good. If you look at Eli Lilly from 5 years ago and you go back to 2017 May-ish, and you look at the red line, Eli Lilly touches the exponential 200 period. I should say 200 period because this is a weekly chart, so it's not
Right.
day, it's weekly. So a 200
Yes.
period, it touches, but it consistently stays above. So this is a
Yeah.
good long-term growth stock over the last 5 years. It passes our first test, and you can see like just for chart readers, where did it close on Friday? Looked like it closed at around
Yeah.
$296.
Yeah. About this side of 297.
Yeah, and then if you go look 5 years ago at the price, Eli Lilly 5 years ago was way down here, and
It's
if we
about
were, and we
50
got
to $75 a
yeah
share.
about $75 a share, so it has grown over time. So
Yes.
good pick there, but again, Patrick, we are
Actually,
in an inflationary market, so we need to point out a few
exactly.
things for our
Exactly.
investors. So these analysts say it's a strong pick. Well, let's point
Yes.
out a few things so that people do not catch a falling knife.
Okay.
Continue,
One
sir.
thing. Yeah. So one thing I wanted to say is the reason how one way I came across it is through Jim Cramer's charitable trust, and you can subscribe to that for free on CNBC. And he would always talk about Eli Lilly on his charitable trust page, and
Okay.
he would say it's the leading drug company stock. And as a result, I did some research. I did the graphs that you
Yeah.
just pointed out.
Yeah.
And then one thing I would like to add to that graph is, or add about talk about that graph, is that it outperformed the S&P over almost every period.
All right. So you're beating them. You're beating the market. You're beating the S&P with Eli Lilly.
Exactly.
The analysts really like Eli Lilly. Such a bull
Yes.
case right now. Eli Lilly seems like a safe bet. So
Yes.
can we keep it moving, and let's go to Yahoo Finance,
Yeah.
what we really
Absolutely.
like to use. I'm gonna click over to Yahoo Finance, and let's take a look at some other things to consider with Eli Lilly. So I'm on Yahoo Finance. I already have Eli Lilly up. And Patrick, we are on our favorite tab, the statistics tab. So let's look at some of these metrics just to see how risky of an investment this is in this inflationary environment. So what do you want to talk us through here, Patrick? Because I see risk right off of the bat. And where do you think I see the risks at, my friend?
I think you're seeing the risk at the forward PE ratio. It's just it's come up because of you know it's always had strong earnings, and the analysts have always raised the stock price. But right now, 33 or so percent, or 35 times earnings would generally be risky in this type of environment. The
Right,
PEG ratio, the PEG
right,
ratio,
right. And just to go back, guys, we want our forward PE ratio, and that is the actual price you're paying for a stock. We don't want to pay over 20 in an environment like this. Tech stocks below 30, but even the tech stocks are going below 20. So yeah, so let's make sure that PE ratio is down a bit. Hey, shout out to the lead attorney in the building. Shout out to a mentor and friend of the show. Shout out to the lead attorney. All right, so I definitely do not like that forward PE, Patrick. It's a little high. It's a little risky in this inflationary environment. We want that forward PE to be 20 or less for stocks we're buying, and especially with a market that's projected to be as volatile as it is, and some of my favorite tech stocks are trading at a forward PE of 20 or less, 35 PE. It better have incredible growth, Patrick. So let's continue. And I'm going to show you a different example of a PE to consider. So let's go, Patrick.
yes. So right now the PEG ratio is about 1.87, and that's come down quite a bit from the 245 that it was um, almost a year ago. But that's still a bit high for a non-tech stock. Of course, you want your non-tech stocks to be one or less.
Yeah, and Patrick, a PEG ratio, again, a PEG ratio of 1.87 in this inflationary environment. So, again, guys, the analyst says this stock is great. I just showed you on bar chart. Jim Cramer is saying it's great on Mad Money on national TV. You look at the numbers, and I see risk. I see a 1.87 PEG ratio. Hey, Patrick, this is what you're paying times the growth rate. What do we want to see that number? What number do we want to see it to be or less in this
Uh,
environment?
yeah, one or less.
Exactly. We don't want to pay more than one times the growth rate in this environment. That's what the PEG ratio, the 5-year expected growth, we want to pay that growth rate or less. You're paying above the growth rate at a 5-year expected in this environment. That's kind of risky. It may be worth it. You may win, but I'm not willing to take the risk in this environment. Here's another red flag, Patrick. What do you see here?
Okay, so we're talking about price to sales ratio. So essentially, you want that to be roughly six or less.
5 or less.
Yes.
5 or less. You're paying 9 times the revenue of the company in this environment. I know it's I know the analyst likes this stock. I know Jim Cramer likes this stock. I know this stock may go up and you may make money, but is it worth the risk of paying 9 times? Where in this environment, you should be paying 5 or less. You know, you don't want to pay. And this is not even a growth. This is a healthcare. Granted, in an inflationary environment, healthcare is where people run. So that's why people are paying more. So let's put that on the table, Patrick.
As well, I was about to double on that. You know, in terms of inflation, healthcare companies or healthcare products tend to go up in price as well. So it's almost like an inflation hedge.
Right.
And as a result,
people are willing to pay more.
And as a result, Eli Lilly has that pricing power.
Right. So
which will keep their profit margins.
That's good.
Strong.
That is excellent to keep in mind.
Yes.
I still don't like paying 9 times sales. I want 10 times sales or less. But if I were to pay more for sales, healthcare is a good sector to be in. Also, the pundits are telling you to be in energy. But Patrick, I don't invest in energy because I don't understand energy. And that's the point. The point is, if you're going to invest in something you understand. I understand tech. I am an aerospace engineer. I do techie things. So I'm a tech investor. So I'm going to look for the best in tech. I was just talking to my son's basketball coach. He's an energy guy. And he's killing me in investment because he's understanding energy. And what does it mean to say understand something? What are we saying by that? What we're saying is you understand why it will go up in value. You have a thesis. If you don't have a thesis of why something goes up and why you should get out because it's going to go down, then you don't understand what you're investing in. So I have a thesis on my tech picks. What is your thesis on this? Are you picking this just because Jim Cramer told you to pick it? Or do you have a thesis of why this should go up? And if that situation changes, then you know when to get out. That's my question to you.
So my thesis is number one, it's a leading stock in the healthcare industry, and I think it was AstraZeneca and Roche were some of the leading ones. It's basically the best of breed of that company. Of that industry. Number two, I was looking at the charts. They look pretty good. Number three, there'll always be demand for healthcare.
Gotcha. So it's a long-term play for you. You're not
It's a
trading.
long-term play.
So you can just buy it regardless. Okay.
It pays a 1.5% dividend.
All right, Patrick.
Annual dividend.
I'm not really digging the price of sales. I'm going to show a different example, and let's continue. I'm a tech guy. So it is what it is. Let's look at the management effectiveness. So return on assets, 12%, return on equity, 74%. That's a little on the large side. That could be an indicator of excessive debt. That could be the 74%. So that's something to look out for. The return on assets is 12%. We like that 15% or more. We do, guys. So, yeah, so let's continue. And then let's look at the debt, Patrick. Look at the debt. 16.5 billion in debt. And income from operations is 10. So we do not have enough income from operations to cover the debt. We do have 2.5 billion in cash. So got a little bit of debt on the balance sheet here. We would like to have those companies that the cash from operations, which is EBITDA, can cover the debt. That's a pristine balance sheet, right? So I'll show you a better example of that. All right, Patrick. So because this forward PE, we're paying 35 times, where in this environment, we would really like to pay 20 times or less. So this is an expensive stock, but we know why. Because people run to healthcare in an inflationary market. We better have good growth on this company, Patrick, to justify paying this much. Because when we buy stocks, we're buying growth, right?
We
That's
are.
literally what we're buying. So
We're buying growth and cash flow.
both growth and cash flow. So, all right, Patrick. So how do we look up growth? This is how we look up growth. We go to Yahoo Finance, and instead of being in statistics, we go over to analysis. This
Yes.
is it. And then we go to the bottom of analysis and what kind of growth we're buying over a 5-year period. And Patrick, this is my rub with Eli Lilly. Look at the 5 year. Now, over the past 5 years, Eli Lilly has been growing per annum, which is per year, 17%. But projected over the next 5 years, it's only projected to grow 6.5%. So why would I pay 35 times earnings for a company that's only projected to grow 6.5%? Are the analysts wrong? Or am I missing something? This thing, because that is not enough growth for me to be paying over 20 times forward for a company that's only growing at this rate. Now, granted, next year, this company is projected to grow 14%, 13.9. I'll round it up to 14. But this current year is only projected to grow 6.8%. So I don't quite get why somebody would pay above 20 forward PE for a stock with that kind of growth rate. It only has to be related to everyone is running to it because it's a healthcare. You know what I mean? That's the
Yeah.
only thing that I can justify for why someone would do that.
Well, I mean, those are valid points, but at the same time, it's been a solid performer over all these years. So it could also be a flight to quality in terms of in times of uncertainty too.
That's a good
And
point. That's a good point because we show that right here. Good point because you show right here it was around $80 a share 5 years ago, and this stock consistently stays above the 200-day moving average. So good point. Continue. I cut you off.
no, not only that, the dividends that the Eli Lilly has instituted has never decreased.
Mm,
It's steadily grown and
mm,
grown and grown.
mm.
So I'm not sure if you would want to call it a dividend aristocrat, but it's definitely a strong dividend player.
All right, Patrick. Well, before we wrap up the show, let's spin off on something I like. I am a techie. Yeah, I'm 6'4", big, tall guy, athletic, but I'm still a techie. I'm still an engineer. So look, let's look at what I like. Let's look at a company called AMD, and we talk about this company at nauseum, and it's trading at a true discount. I like to go over some of the metrics for AMD to consider in comparison to what we just talked about a moment ago with Eli Lilly. Okay?
Yes, absolutely.
So let's go right to the analyst rating. We're on barchart.com, the free version, on the homepage, and the analyst ratings not as good as your Eli Lilly. Eli Lilly is a healthcare. AMD is a semiconductor tech stock, so it's more hated. But in the stock market, what are you supposed to do, Patrick? Don't you supposed to pivot when everyone's going this way? You're supposed to go the other way?
You're supposed to be a contrarian.
Absolutely. And so everyone hates tech right now. So tech is the play. When everyone loved tech, that's when you should have been trimming and taking some profits. Thank God I took some profits and paid off a few things. What I didn't take, I lost. At least I'm losing for now. It'll come back. So, but right here, the analyst is saying moderate buy on AMD. So not as good as Eli Lilly. And then if you go and look at, the lower level ratings, 9 holes right here. That's 9. Screen is pretty small, but no sales, but all moderate buys. So not as good as Eli Lilly. But this is why I want people to fish for themselves. So let's look at an interactive chart on AMD. So if you look at the 5-year period, same as we did with Eli Lilly, we're on AMD here, and we're on interactive. You could just see that AMD has consistently stayed above the 200-day moving average, which is good. But we have broken the 50-day, the blue 50-day moving average. So we broke right here. So that's not good. That means that AMD could possibly come down to this 73 area. And let me look at a 1-year daily. It's not good. The stock is really broken down. So what that means is, if this is not a broken company, this is a great opportunity to make money long term. So short-term trade, you might get burned. Long-term, you can make a lot of money, and I'm going to show you why here. Okay, so that's that, Patrick. Now let's go and then let's look at Yahoo Finance on AMD. So I'm on Yahoo Finance here. I'm on my fave statistics where we just were on Eli Lilly. I'm going to blow this up for our audience. Forward PE, Patrick.
Is that 22, 23?
22.88 forward PE. So I'm only paying 22.88 times the forward earnings projections. That's what that means. Tech stocks, typically below 30 is good. So 22 is not bad. Look at the PEG ratio. I'm close to 1. I'm close to paying the expected growth rate of the company. And then you can look in the past what AMD traded for from a PEG ratio perspective. And if you do an average, it's like 1.4-ish. We had one anomaly right here, but about 1.4. It's right now 1.1. So this is a cheap stock. And the reason why it's cheap, it's a tech stock. Everyone hates tech stocks right now, right? But exactly. It's a good opportunity if AMD is going to go back up. And I'm saying it is. Now look at the price to sales, Patrick. I like that to be 5 or less, but it's right at 6. But look at in the past what AMD has traded for. 9 times. So a significant discount, 6 times its revenue. Sales is a fancy name for, revenue is a fancy name for sales. Let's look at the management effectiveness. Return on assets above 15%, a strong 21%, and return on equity 47%. That's really good. Now, here is the income from operations, which is EBITDA. And again, EBITDA stands for earnings before interest, tax, depreciation, and amortization, which is just income from operations. So you want your income from operations to be able to cover your debt. So they're making $4 billion. Now let's look at the debt on the balance sheet. Only $732 million. So they got more than enough money for operations to cover their debt. And not only that, Patrick, they have enough cash, $3.6 billion, to cover the $732 million of debt. So a pristine balance sheet. So a beautiful company, trading at a discount and kind of low right now. A great opportunity if you see long term, you want to buy. Now, here's a concern right here, Patrick. I don't want to be overly rosy. Year-over-year quarterly earnings growth is down 45%. But we can explain that 45% because of the chip shortage, right? AMD has foundries that produces their chips, and a foundry is just a fancy name for a manufacturer of chips. So there's a chip shortage, and they sell them as quick as they can get them, but that's because of the chip shortage, foundry situation. Once they get that supply chain worked out, they're going to kill the game. And if you listen to their earnings call, Patrick, what did Lisa Su say on the earnings call that from Tuesday? Because AMD just reported earnings on Tuesday. And what did she
Yeah.
say?
Well, first of all, I know she or the her team reported that they closed on the Xilinx acquisition.
Absolutely. They're killing the Xilinx. So they're closing the Xilinx acquisition, which is going to give them more growth and profits. And
Well, what would also do is that it would allow them to produce smarter chips.
right. And the embedded market too. Xilinx is
Yes.
really big in the embedded market. But just on top of that, what she said on the earnings call, and guys, go back and look at the earnings call for AMD and get the info. You can listen to the CEO of AMD talk about the shortages in their supply chain that we just showed, and they are working that out.
Yeah,
And
they are. They're definitely managing
and their
the
guidance,
chip shortage.
for the future shows that they're going to improve on this whole foundry situation. So
Right.
they're looking pretty good there. So I'm a big bull on AMD. If you
I
guys
am too.
if you
I
guys
am
want
too.
me and Patrick to do a review on the AMD earnings call, we can do that on a future show. They just reported on Tuesday. And if you do not know how to find an earnings call, you can go to betoutofdebt.com and just look for how to find an earnings call. And we have a 3-minute clip on how to find an earnings call. Just go look at that and just listen. You do have to put your information in like you're an institutional investor, but that's nothing. And but look, Patrick, let's go here. That was the statistics. So I guess the key point is we're paying 22 times earnings here in this inflationary environment. So still a little pricey. We want to be 20 or less. Tech stocks are even trading below 20. Let's look at analysis is how we look at the growth rate, the projected growth rate for AMD. So we're going to go down to the bottom of the screen. Now, your Eli Lilly, Patrick, look at my AMD projected growth rate year over year for the next 5 years.
Yeah. However, I mean, you are comparing apples to oranges when you compare Eli Lilly to to AMD in defense of Eli Lilly. But I would agree that AMD is a solid company, and I've got shares in it. I'm looking at buying more shares in it.
And check this out, Patrick. If you listen to the earnings call with Dr. Lisa Su, she tells you that the earnings are projected to grow 60%. Not 6, not 10, not 20. I sound like LeBron James. 60%.
Yeah,
That's crazy.
that's
And
insane.
and then the analysts on the call asked Lisa, they asked, okay, so you're projecting this big growth, but don't you have a supply chain foundry issue where how are you going to meet that demand? And she said, this is baked in the numbers. We're projected to grow from 32% to 60%, and it's because we're working out the supply chain. So, I mean, why wouldn't someone buy an AMD or at least consider buying an AMD when it's discounted like this? And if you look at the charts, and let me go back to the AMD chart real quick. Let me look how far AMD is down from its highs. Like AMD at its high was above 160, and now AMD is below 100. It's way down here. And if you guys know support and resistance, AMD can really come down to this level right here. This is probably a low level right here in the 75 range. Let me see if I can blow that up a bit because it's really small on the screen here. Let me go. So this will be the range right here. This 85 range would be where they bounced off before. This would be a really good range. But guys, if AMD go below 80, do you know what Troy Johnson is going to do? I'm going to load the boat. Do you know what load the boat is, Patrick?
That means you're gonna buy a considerable amount of it.
I'm going to buy like crazy. And I'm going to hold. And I'm going to do like I've done in the past. That's how I was able to pay off my house. That's how I was pay off my investment properties. I want myself free and clear from doing this right here. This is what I'm going to do. In memory of my fraternity brother Kevin Samuels and being a high value man. And we're gonna go in. We're gonna go in if that thing goes below 80. And those are the reasons why we're gonna go in, because this is an excellent stock. If you look at the 5-year performance on it, you can see that AMD consistently stays above the 200-day moving average. So with all of this volatility, as much as AMD has fallen, it does not, over time, it has not breached the weekly 200 period moving average.
It hasn't even come close to it in recent times.
If you can get AMD around this price, you should really seriously consider it. It's such a
I think
great.
at the current price that it's at, I mean, as long as the market doesn't continue to roll over, I mean, it's still very attractive.
So that's my case. And there are other companies out there to consider. But when you look at the growth rate and you look at what the pundits say, so that's it, Patrick. Man, do we have any Greeks in the building? Because I don't typically wear my Greek up here. I'm wearing my Fanu Pi. We got any Greeks in the building? Stand up, Greeks. Leave a comment. Go back and look at the beginning if you joined late to see what I had to say about my fraternity brother Kevin Samuels and how he inspired me and what the fraternity has done for me. And look, Patrick, I recommend if you got some babies going to college, like I have one that just got accepted to the Howard University. You know, I'm a graduate of Tuskegee University. Have them consider a fraternity and your baby daughters a sorority. And I will be pulling their resumes when they come out if they are in engineering. So that's it, Patrick. Anything else before we wrap up the show, my friend?
Now, just do your research, do your due diligence. Diversify. You don't necessarily have to always buy tech. You can look at your other industries. Buy the best of breed.
Best of breed, and know what you're buying. And knowing what you're
Exactly.
buying means you understand why it's going up. And equally important, you know when to get out because your thesis is broken down. So you know it's time to get out. And typically when everyone's doing a shout out for it, it's time to get out. So
Exactly.
that's what's making me nervous about energy, because everyone's doing a shout out, and it makes me nervous. But it is a good space. I'm not an energy guy. All right, Patrick.
Me neither.
Yep. So Patrick, I think that's it for today. We call this show the Bet Out of Debt Show because when you place a trade, it's called placing a bet, which is a metaphor for investing. Hopefully it's a winning one to keep you out of debt, especially in this inflationary environment. And thank you guys so much for joining us today. Hopefully we provided some value. Hopefully we gave you enough information so you can go out and look at other YouTubers and kind of understand and be able to pick apart stock picks and make your own picks on your own and become better investors. So take care, and we'll see you next time.